Okay, welcome back to Lunch at the Market. Taking a look at this market, it's still tough to see a direction. You have cash and you're just itching to buy something. Since you listened to us early in January and raised cash after you had huge gains with us in 2009, take a look at some of the nice dividend producers like Chevron, symbol CVX, trading at 7.4 times forward earnings with a 3.7% dividend. That is just silly valuation for a company like Chevron, certainly one where you don't have to be worried about the dividends. So let's take a look at Pfizer, symbol PFE. That stock has a 4% dividend and trades at 7.78 PE on forward earnings. Those are crazy valuations and rather attractive dividends. One more name from our patch of dividends, our special favorite, Calumet Specialty Products, partners symbol CLMT, trades at 10.28 on trailing earnings and only 8.82 forward PE with a 9.5% dividend. You can grab CLMT below $20, especially as close to 19 as it is right now. We really like these names. Now, with the announcement of Slumberger Limited acquisitions of Smith International, we think there are two trades. One, by Slumberger, symbol SLB, has a 1.3% dividend. Not bad, but it's down nearly 10% from the announcement of the deal and now trades at 15.86 times forward earnings. I don't see how acquiring another company would detract from growth. Do you? The dividend isn't enough of a reason to buy Slumberger, but the decline of the stock sure is, and it's one of the best oilfield service companies out there. The second trade-off of the news is Weatherford, symbol WFT. Similar to the XTO Chesapeake play, we think that Weatherford is a name you can own because of all the rumors that they'll be the next target. We wouldn't recommend a stock just on a takeover talk, but WFT has a forward PE of 11.96 from current PE of 47.3. You don't have to tell me what that means for earnings, which should apparently skyrocket going forward. If they can get any kind of realistic PE like 20, then you'll see the company's stock at $27.84, about $11 from here, or a 66% return. Even if the company only does half of what we're looking at, that's still a 33% rate of return. The company has a PEG of 0.86. That's just not even realistic. PEG is the number when you divide the PE by the 5-year growth rate to get a PEG. Jim Cramer's rule is not to pay more than 2 times growth. So a PEG of greater than 2 should cause some kind of concern, but a PEG of less than 1 should signal you that you're getting very attractive price growth. Take a look at Weatherford today. One more company, Banco Santander, has been badly sold off. The stock now yields 4%, and they are extremely well-run bank, and their new IPO they did for the Brazilian banking arm. Know that you would be jumping into the storm of all the mess over in Europe, but we're really usually very early to the party, like when we bought XHB back in November, only to have it wait through December with an index below $15 for some time before breaking out to the upside. So, we are building our STD position in Banco Santander. It has a terrible ticker symbol, but we don't think they're making business as bad as their stock price indicates. Thanks for joining us today, and don't forget to leave your comments, and have a great day. Don't forget that the U.S. men's curling team plays China tonight. Should be a great game since both teams are at the bottom of the standings. Oh well, we can't all be from Canada. Speaking of Canada versus America, what a great hockey game for the Americans last night. Now that's my kind of sport. Curling seems like bowling to me, only slower. Let's see how the Americans do against the Russians. It kind of reminds me of the Miracle on Ice on February 22nd, 1980, down in Lake Placid. We'll see if the Americans can do it again. We do have a Canuck or two over at Magnum Opus Financial, so as long as it's red, white, or red, white, and blue, we're covered. So we'll see you tomorrow.